Imagine an investment so powerful that people risk everything to get in. Prices soared overnight, fortunes were made, and then, just as quickly, it all collapsed, wiping out countless investors.
Bubbles are always hard to ascertain the originators of. There really aren't any originators. Everybody got caught in. Some were foolish, some were crooked, some were both. But you had a mass illusion that it could go on forever.
Sound familiar? We can say it's happened over and over again in history. But what if I told you that the oldest and one of the most infamous financial bubbles wasn't about stocks or real estate, but flowers? That's right. This is the story of Tulipmania, the 400-year-old bubble that one could say still affects financial markets today. So, what really happened back then, and what can it teach us? In the early 1600s, the Dutch Republic was booming. Trade, finance, and innovation had made it one of the wealthiest places in Europe. The newly independent country had a powerful economy, and many of its citizens had money to spend on luxury goods. Among these luxuries was a relatively new and exotic flower, the tulip. Tulips had arrived in the Netherlands from the Ottoman Empire in the late 1500s. But these weren't just any flowers. The most unique tulip, with striking colors and beautiful patterns, was Semper Augustus, and it soon became considered a sign of wealth and prestige. Wealthy merchants, aristocrats, and investors all wanted them in their gardens. The demand for tulips kept growing, and soon, people weren't just buying tulips to plant. They were buying them as an investment. One tulip could cost as much as 5,000 guilders, the price of a Grand Canal-side house in Amsterdam. By the 1630s, the market for tulips had transformed. People weren't just buying the flowers themselves. They started buying tulip bulbs that were more durable and easier to transport. That opened the market for tulip futures, contracts to buy tulip bulbs at a later date. Since tulips only bloomed for a short season, traders would agree to buy bulbs months in advance, speculating on future prices. A single tulip bulb could be exchanged multiple times before it was ever even planted. Then, in early 1637, the bubble burst. Apparently one day, at an auction in Haarlem, no buyers showed up. Suddenly, people realized the prices were ridiculously inflated. Tulips were just flowers, after all, with no real value beyond what people were willing to pay. Panic spread. Everyone rushed to sell, but there were no buyers. Almost overnight, the market collapsed, wiping out fortunes and leaving many ordinary Dutch families in financial ruin. This Tulipmania was an early illustration of the greater fool theory, the idea that people buy assets not for their intrinsic value, but in the hope that someone else will pay an even higher price. Unlike modern financial crashes, Tulipmania didn't destroy the Dutch economy. Most of the real wealth was still tied to trade and industry. But still, many people lost fortunes. Tulipmania became a cautionary tale, often used as an example of irrational speculation and market bubbles. Because whether it's stocks, real estate, cryptocurrencies, or NFTs, the pattern remains pretty much the same. A new exciting investment emerges, prices start rising, more and more people jump in because they believe prices will keep going up, and at some point, reality hits, confidence collapses, and the bubble bursts. And when that happens, the only question is, who gets out in time and who's left holding nothing? Lessons from Tulipmania? Markets can be irrational, and just because prices are rising doesn't mean they're based on real value. Speculation, hype, and herd mentality can push assets far beyond their fundamental worth. The greater fool fallacy plays a huge role. Investors often believe they can sell to someone else at a higher price, but when the market turns, buyers disappear overnight. Avoiding blind FOMO investing is crucial. Never invest just because something is trendy or because others are making money. Always understand what you're buying. Timing the market is also incredibly difficult. Many thought tulip prices would keep rising forever, until they didn't. Guessing market tops and bottoms is not an easy game. If you want to find out what the hidden risks of low interest rates are, you might like this video. And this video might interest you if you want to know why prices can stay the same, i.e., why we need inflation. Thanks for watching.